One of the reasons why our clients approach us is they use the equity loan that they can take out of their property towards that consolidation purposes. And it does wonders for them.
I was going to ask if you had any tips for potential clients, and feel free to sort of tweak your tips based on the generation that a particular borrower may be in. If it's, boomers who are looking to help their Generation Y, Generation X kids, younger siblings with a first time home purchase, or that young couple that's just gotten into the housing market. What are some tips you have for people who are looking to use the equity that they have to get financing?
So the traditional banking industry is very credit focused, as you know. We have the FICO scores and we have the bankruptcy scores that most banks rely heavily on when they are looking at lending in any capacity, whether you're looking at financing a car or refinancing your mortgage or even getting a credit card. The better your credit rating is, the lower interest rate you end up paying, the less fees you end up paying. One of the reasons why our clients approach us is they use the equity loan that they can take out of their property towards that consolidation purposes. And it does wonders for them. A secret that I need to share with our viewers is that unlike all conventional lenders, we do not report the mortgages to the credit bureau, meaning that once you take out an equity loan from us, you can pay off all your high interest credit cards, lines of credits, loans that you have. That is reported to your credit on a monthly basis and impacts your score. Believe it or not, capacity is one of the things that impacts credit scores more significantly than anything else. And capacity is basically how much credit do you have available and how much of it have you used. And the more you have used of available credit to you, the lower your credit score will be driven. So one of the unique features of our product is that because we do not report to the credit agencies, all the debt that you have reported on the credit bureau will fall off, immediately boost up your credit score, and there's no new debt to be shown. Because while we do register the product on title of the property, we do not report it to the credit agency. That helps people with future financing of anything, whether you're looking at renewing your mortgage with your first mortgage with your conventional bank, or you're looking at refinancing it and taking out more cash, or even if you're trying to get a car loan or just a simple credit card, it does wonders for people. It boosts up scores anywhere from 150 to 200 points, believe it or not, because all your debt comes off. So debt consolidation is one of the core purposes that our clients use us for. And my strong recommendation to our viewers is to use the services that Alpine Credit offers to consolidate some of their debt, especially, over the last couple of years, people have tend to get themselves into more financial, mostly because of, insecurity of employment, small businesses, whatnot. There are a lot of households that have incurred more debt than before, and to use the equity you have available in your home to pay off that debt not only makes it easier to pay back, because instead of paying, five different credit cards or lines of credit, you do one lump sum payment on a monthly basis, but it also does wonders for people's credit.
Well, that's fantastic. And I'm sure all our viewers will really appreciate that very hot tip of debt consolidation. I think it's very handy to know. Anything else you'd like to highlight? Anything that we haven't discussed so far, Gel?